All right. Hello, everybody. Thanks for joining us today. This is the institutional adoption panel. So, as Hyperliquid is growing and evolving, institutions are starting to pay attention, and we have digital asset trusts that are acquiring hype. We have Hyperliquid being talked about on financial news segments. It's really starting to reach this mainstream appeal. And there's some questions, what does it look like for Hyperliquid, this chain, this ecosystem born of retail traders to have this institutional adoption? Is it good for the industry or for the ecosystem? Is it bad? What does it mean? And I'm lucky to be joined with some titans of the crypto industry, institutional players within crypto and Hyperliquid specifically here. We have Nathan from BitGo. We have Jonny from Circle. We have Hanson from Flowdesk, and then we have Hyunsu from Hyperion. And we're going to dive into institutions on Hyperliquid. So to kick things off, would love each of you to just give a 30-second intro on who you are and what you're building and how that specifically pertains to Hyperliquid. We'll just go this way, starting with Nathan.
Yeah, so my name is Nathan Stump. I'm a director at BitGo. For those who aren't familiar with the firm, we were founded in 2013. We're the largest independent digital asset custodian. We recently went public on the New York Stock Exchange. We hold assets for our clients. So as a custodian, we work with funds, we work with public traded companies, exchanges that want to list Hyperliquid in either the core EVM capacity, and we as a custodian just support the ecosystem.
Everyone, I'm Jonny from Circle's BD ecosystem team. Sure, all of you know Circle at this point. We are USDC effectively, but we're more than USDC. We have a whole developer suite of products. If you ever bridge cross chain, you're likely using our CCTP protocol. Excited to have everyone here.
Hey everyone, my name's Hanson Birringer. I run US sales at Flowdesk. We're a global market maker and OTC trading firm. Within the Hyperliquid ecosystem, we've been a pretty early on supporter, not only with our trading infrastructure, but also as an investor in the space with 6 different investments within the EVM. We also run a public node. It's called Flowdesk. You should check it out.
Hey everyone, Hyunsu, Jung, CEO of Hyperion DeFi, the first public listed company building a long-term strategic reserve of HYPE. But more importantly, we are deploying the HYPE into the ecosystem. We've launched a HYPE market. We have our own validator, and we're directly involved in the Hyper EVM, have some exposure to token protocols like KNTQ. And so long-term, the goal is to create a comprehensive exposure to the Hyperliquid ecosystem for retail and institutional investors.
Awesome. Thanks, everyone. So as you can see, there is some institutional demand and adoption occurring within Hyperliquid, but maybe we still have a long way to go. So before we get into the more meaty questions, I'd love to just go down the line again and get your take on where do you think Hyperliquid sits currently in terms of institutional adoption? Is it just in the experimental phase? Is it just starting to emerge, or is it already in this place where institutions can start to onboard and participate? Let's start with Hyunsu and work our way back down this way.
Yeah, so I think one of the biggest unlocks over the past few weeks was Hidden Road, or now Ripple Prime, unlocking or integrating Hyperliquid into their Prime brokerage account, right? So you have institutional clients that can access Binance, Bybit, and also Hyperliquid all in one unified account. While simultaneously, unified margin account is also being implemented on Hyperliquid. So you're creating infrastructure that will enable serious traders and then now more massive institutional allocators of capital to use Hyperliquid as one of these venues. And the unique component to Hyperliquid is 99% of the fees that are being generated on the platform are going back to purchase the HYPE token. So that's a structural component and an incentive alignment mechanism that is really unique to Hyperliquid. And I think it'll also appeal a lot to institutional investors and users.
Yeah, I think also some of the big unlocks are actually on the stage with us too, with native integrations and deployments of the world's leading stablecoins. The world's largest custodians now support Hypercore and Hyper EVM. This was not true even 6 months ago, 12 months ago, 18 months ago when the token launched. And that's probably been the biggest, I would say, upgrade to the network, is having this core infrastructure that's available across the industry for other assets now supporting Hyperliquid.
Couldn't agree more. Couldn't agree more. I think it's graduated from this experimental phase into an emerging phase. It's already hit product market fit. I mean, it's more liquid and capital efficient than some centralized exchanges. It's incredible what the Hyperliquid ecosystem has done and what Jeff and the rest of the team have built here. And like you said, native USDC, Genius, Mika regulated stablecoins and infrastructure that's coming in, that's allowing that kind of institutional capital to come in. I think the volume and the product in itself is starting to turn heads. In the traditional Web2 world.
Yeah, so from our perspective, it's kind of a little bit different than I think a lot of the others on stage, right? So we don't take a directional bet on any single asset class. We make sure that our clients, everything from the largest VCs, the largest exchanges, public companies, as I mentioned, all that we can support the assets that they want to support. So I'll tell a quick story. So I was with Hanson doing right after TGE. It might have been a day or two after TGE. And I really was not super familiar with Hyperliquid, full honestly. And so then he started showing me how to bridge and how to get into it and things like that. And it was really interesting. So for us as an organization, we have to think about, okay, if we're going to integrate a new L1 into the ecosystem, how do we do that? And it takes time, it takes engineers, it takes some money. And so we spent the time to figure out, okay, what's the client demand going to be? Because people use us because sometimes the regulatory have to. If you're an investment fund, you might have to use what's the team a qualified custodian. We are an OCC chartered bank, federally chartered bank here in the United States. So I think for what unlocked, hopefully for the ecosystem, by us integrating into Hyperliquid has allowed large institutional players that don't want to hold assets in a self-custodial environment to use someone like BitGo to hold the core position and over time, hopefully accumulate the asset. Again, we don't make a directional bet, but what we've seen is more and more clients being interested in holding the asset. And that's a direct reflection of us taking the time to build into it.
And that kind of leads into my next question, which is a little more like philosophical. You're talking about how these institutions, they don't actually want to hold the assets. You're helping them to custody it. But so Hyperliquid has this kind of like community first ethos, if you will, and some of the core pillars are like decentralized and non-custodial and maybe pure and fair. And these are some of the ways that people describe Hyperliquid, right? So do you think that this like institutional adoption that we're seeing, does this like validate Hyperliquid's model, or is this like a threat to its community first and the non-custodial ethos?
So, what clients can't do today is be in the BitGo ecosystem on the QC side and be able to trade on the venue and things like that. We do have the ability, if someone has a hot wallet, they can plug into Hyperliquid on the DeFi side and trade and do what they want. And that's been, we've seen a lot of clients use that and it's been successful. From my perspective, I think that there's kind of these two stories, right? You want to use Hyperliquid or you want to hold Hype. And what we focus more on the clients who want to be long the underlying asset and do things like staking that asset and things like that. And so we wanted to build support on the non-custodial side so you could trade it and using wallet infrastructure, pioneered at BitGo. And then if you want to be long the underlying asset, holding it in the cold storage environment long-term. So I think it unlocks large participants to be able to hold the asset. And I think they want to hold the asset because they think the idea of people being in the ecosystem will continue to grow, which is probably where Hanson and everybody else sits.
Yeah, it makes a ton of sense. Yeah, go ahead, Jonny.
Yeah, and whether it hurts or it validates it, I believe it validates it, and it validates what the whole community has been building to this point. These institutions, when they're coming in, they're competing on the same level playing ground in terms of liquidity, in terms of transparency. So I think that we're going into this divergence away from that like gatekeeping, almost that upgraded market infrastructure. So it's pretty exciting.
Yeah, I think this room here is a testament to the community that Hyperliquid has built. The team has taken a stance of putting the community first, giving a lot of opportunity to create revenue that otherwise they would have captured themselves with builder codes and other kind of broader distribution goals. So I think it's been an interesting development to see the community evolve over time. It's still very small, I think, and that's what's exciting to me, because I think Hyperliquid is kind of the end game for crypto, and we're still very early to that chapter.
Yeah, I mean, I would add on to that, right? We're all here for pretty obvious reasons, but it seems pretty clear that Hyperliquid is like a generational asset, right? The rate that they're innovating. When we talk about early community, I think they have been rewarded in the original era. Everyone else, you buy Hype at the price you deserve, I think, and people kind of say that as also very. like you have to have a long-term view of what's going to matter. And I think with the crypto performing the way it's performing, it's new technology that endures or has more meaningful staying power when we think about what will accrue value in the future. Right? It's not going to be a lot of these tokens that exist as they are today.
Yeah, what I'll add to both their points is like, again, for us, 1.0 is being able to support Hype, right? But we're seeing a lot of demand on clients asking us or looking at how do we support other tokens being within the network, right, on the EVM side and things like that. So I think to Hanson's point, it's a testament to like what a lot of the community has done, but we're seeing now the ecosystem grow around what started as a single asset.
Yeah, I love what some of you guys are saying. Like, Hype is this a generational asset or the end game for crypto, and coming from these guys who are like, so involved at this like high level, I think it's like really exciting, and I would tend to agree that like this is like a necessary maturation of the ecosystem. This is like kind of the next phase, and we can't stay in this like kind of community-centric way forever. Like in order for it to grow, we need to onboard the big boys, right? But in a way that still aligns with Hyperliquid's original vision. So Nathan, I want to dive a little bit deeper into what you're offering. Like, so you work with clients; they have very strict, risk tolerance and procedures, and there's a lot of things that maybe prevent them from being involved in something like Hyperliquid. So I'm curious, like, what are when you talk to your clients, like, what do they think about Hyperliquid, and what are some of like the non-negotiable things that they needed to see from you or from the ecosystem generally before they were able to participate?
Yeah, so for us, it was again wanting to be long the underlying asset of Hype, and so the non-negotiables typically are assets being able to be held within our regulatory structure. So if we have a large VC, or like let's take ETFs. I think, correct me if I'm wrong, but I believe a few of the issuers came out with saying looking at doing a Hyperliquid ETF. They typically need to use a qualified custodian behind the scenes regulatorily. So that could be through Investment Act 40 or something like that. And it's typically a state chartered trust or an OCC chartered bank. We received an OCC charter back in February, but prior to that, we were a state chartered trust in South Dakota. So what's a non-negotiable? A non-negotiable is a firm that can, a regulated custodian that can hold these assets. And so that was for us, what we felt we could help bring to the ecosystem was an unlock for large institutional capital to acquire the asset by being able to support the underlying base. And that was allowing people like an ETF issuer or a large fund that their risk departments maybe aren't comfortable with self-custody. Maybe they take a small allocation on the self-custodial side, but they won't take a large allocation because they can't use one of their QCs. It unlocks that, hopefully, for the ecosystem.
And is there anything that makes Hyperliquid like special or like above other things that your clients are interested in? Like, is there any specific thing that makes them particularly excited, or Hyperliquid's like ahead of the curve in terms of what your clients are looking for?
I would say from BitGo's perspective, we don't really get a lot of that feedback necessarily. We talk to clients who want to hold the underlying. But what I will say is from a personal side, I think a lot of the folks that we speak to and who are interested about the ecosystem have been very excited about how it's grown and what we've seen from buybacks from, the treasury and things like that. And so, I think the folks that are acquiring the asset are very interested in everything that's happening and, the deep liquidity and everything you can do on it. I mean, our Prime Desk, I believe, does actually use Hyperliquid itself as part of the trading org. So like there is, and it's just one vendor on the LP side. So like we see a lot of interesting activity as well as to why people want the asset. But again, most of the questions that come our way is not, telling us what they're excited about. It's just making sure as they get more allocated or they want to allocate more, it's us being able to support not only the core, but also staking, which we just rolled out in the last 2 weeks.
Oh, nice. Congrats. That's huge. I want to pivot to market making. So we have Hanson over here. Would love to hear from your perspective. Like, there's a lot of market makers who are looking at Hyperliquid right now. They're interested, but maybe something's like holding them back from being actively involved. So like, what would you say are the biggest blockers right now, if any, to having more market makers participating in Hyperliquid? What do they need to see before they go from being like curious to actively trading?
Yeah, I think, this answer's changed substantially in the last year and a half, even, 3-6 months. And the biggest thing is most likely their operational kind of like infrastructure, like integration with Hyperliquid. the considerations are very different when you're talking about a SEX versus a DEX, just in terms of the literal custody of the assets you're using to trade on there, your cross-margin capabilities with other venues you're hedging your risk on, and then also just the listable assets that you can trade. I think we saw, and the kind of numbers I think we mentioned in our last panel with Circle, the inflows of capital to the exchange on the rise of HIP-3 assets has just been tremendous. It's clearly a net new user to the exchange. And so I think the biggest, kind of tailwind or, for Hyperliquid is just new listed assets, and then kind of this cross margin and coin margin portfolio that will be unlocked in the coming, weeks to months, hopefully. That'll probably be the biggest catalyst to improve volumes for the exchange from a market maker's perspective.
Okay, all right. So we're just like weeks away potentially from this huge unlock of all this.
I think so.
Okay, that's awesome. Is there anything else on the infrastructure side, like anything on tooling or compliance or anything else that you can think of that's holding people back generally?
Yeah, there will be certain firms who, they can't trade on unregulated exchanges, right? They have to know who they're trading against, and they'll just, maybe unfortunately or fortunately, depending on how you view it, they just won't trade on DEXs. There could be a world where there's a regulated front end for Hyperliquid, which has separate order books because of a HIP-3 deployer, having whitelisted wallets to trade those assets. I'm not sure, the timing of that, if ever, but, there'll just always be certain counterparts who won't trade on deregulated or decentralized venues, and I think that's okay.
Yeah, makes sense. Is that something that BitGo would help with, or that you can kind of alleviate, or do you have similar concerns with your customers?
So we try to alleviate it by working with folks, and a great example of that, if a client comes to us and says, "Hey, we understand there's liquidity on Hyperliquid. How can we gather some of that liquidity? It'll be a take or whatever it might be." We may go to a desk like a Flowdesk and say, "Hey, quote us," and we talk to folks like that and say, "Hey, how are you guys plugged into Hyperliquid?" And if they're plugged in from a liquidity perspective, we can face an LP directly. So BitGo itself, I don't want to make necessarily a statement, but BitGo will not necessarily, we're not going to expect, like I said, out of the self-custodial side, if you want to plug in directly, you can. But if you're trying to face BitGo's Prime or BitGo's trading desk on an OTC basis, we will work with a central counterpart that is potentially using Hyperliquid behind the scenes. But that's because, again, we're an OCC chartered bank. To Hanson's point, we can't, we prefer to know who our counterparty is.
Makes sense. All right, thanks, guys. Now I want to talk to Jonny a little bit. So we're talking about tooling that institutions need to be actually able to participate in Hyperliquid, and I think Circle offers some of those things that are really important. So obviously USDC has seen huge adoption on Hyperliquid. So we'd love to know what is Circle most excited about when they're looking at Hyperliquid right now, and how are things like USDC and CCTP helping to unlock institutional demand and interest?
No, I mean, it's a great question. I'd say that what excites us, I mean, there's so many things. Where do I even begin? For Hyperliquid as its core, USDC or Hyperliquid is one of the clearest examples for USDC or stablecoins as a whole for productive capital. It's I mean, there's 3 to 4 to 5 billion in USDC sitting in Hyperliquid alone. And what also gets us excited is everything that's being built on top of that. We talked about front ends being used with builder codes. We talked about new asset classes with trade and trade.xyz, HIP-3, etc. Bringing in these new capital and all that. Bringing in that institutional capital, I think I touched upon it earlier with a Genius and Mika regulated stablecoin that you can trust, that has trust associated with it. I was just talking about earlier how the core asset for collateral needs to have trust at its ethos, because everything built on top of it, if there's risk associated with the collateral asset, everything else that's being on top of it's going to inherit that risk. So I'd say that USDC as a whole helps with that institutional adoption. CCTP just allows for these institutions and regular everyday users like you and me, everybody out here, to tap into that 76 billion plus of USDC that's sitting out there, and it's only going to continue to grow.
Yeah. And so we're talking about like these timelines, say like, like market makers are really close to being able to fully invest, where all the pieces are coming into place. So maybe like looking a little further ahead, like Circle's in a really good place on Hyperliquid, obviously. But what do you think in the next maybe 3 months, 6 months? Like how does that change for you guys? What are you looking forward to at Circle for Hyperliquid specifically?
I'd say we're just excited to see the builders keep building, like new use cases, new assets being built on top of Hyperliquid and Hyper EVM, HIP-3, HIP-4, everything of the sort. Just keep on monitoring that. And then if you're a builder, like talk to us. We want to talk to you. We want to engage with you. We have so many products and ways that we can help you grow your ecosystem and tap into that liquidity. So I'll be walking around. Come talk to me.
Go talk to Jonny. Okay, so we've been talking about a theme here has been like new assets that we want to support within the Hyperliquid ecosystem, but let's dial back into the premier asset, and I want to go over to Hyunsu over here. So you are you have external investors who are buying into this treasury full of hype, right? So I'm a hype bull. You don't have to convince me, but when you're talking to investors, like what do you say to them? How do you get them on board with your vision? What made you decide that this was the asset that you wanted to create this trust around? Like what was the thought process there, and how do you interact with investors to get them to see your vision?
Yeah. So things there, but I would say it's a privilege to be able to evangelize Hyperliquid, right? First and foremost, I think it's, like we said before, it's a generational product. Investors in crypto and non-crypto, everyone gets it, right? It's a financial system that generates a lot of revenue. It has huge PMF, and it takes all of that revenue and purchases the token. For HYPE or Hyperion DeFi, our value, you have the ETF, have other digital asset treasuries, and you can go buy the spot asset yourself. There's a lot of ways to approach it. But with Hyperion, not only exposure, you're also getting a public company that has built businesses that are generating revenue agnostic to the price of hype, agnostic to the performance of crypto markets, right? That's HYPE-3. So when Silver or Monero or anything has like its own mini bull cycle, those assets are trading on our markets, and Hyperion is generating cash revenue from that exposure. So that's like another tailwind that we get to achieve. And then the other part that I would say is that Hyperliquid is still very early. It's a very nascent ecosystem. And what you've seen before in Ethereum and Solana and other ecosystems before they go into mass mainstream mindshare is that you have these underlying protocols that are worth less than $50 million that then become worth hundreds of millions or even billions of dollars as a network effect scaling to the base ecosystem. And so that's what we're doing right now is we're engaging very early with a lot of the protocols that we think are very promising, like Kinetic, Felix, and Risk, and we're earning their governance token. So now when you buy HYPE, not only are you getting hype and a revenue generating business, you're also getting comprehensive exposure to the other valuable components of Hyperliquid. I think that's a very straightforward value proposition for retail and institutions. And then most importantly, we take that capital, buy more hype, and then re-accelerate the flywheel. So it's something that just, I think, is very uniquely positioned in this ecosystem. And it's a unique opportunity that doesn't exist, I think, in any market as it is today.
Yeah, so like what's really interesting is like Hyperliquid, I think everybody's well aware, right? Hyperliquid is very slow to get listed on a lot of centralized exchanges. So if you were on board to somewhere like, I don't want to name names, if you just on board to a centralized exchange, it's typically using money transmission licenses, and it's kind of assets sit in like a pool account, and you just trade, because when you settle, it's settling through one wallet or multiple wallets within that exchange controls. What Hyunsu did, and there's different opinions of digital asset treasuries, but what I think it's amazing is like, you can now take an asset where most people in this room, including myself, can't open a bank account holding crypto, right? You open an account at a centralized exchange. We are an institutional firm only. We only face large institutional participants. So you can't buy a bunch of hype and hold it in a bankruptcy remote vehicle. What you can do is buy the stock, and as the stock trades more in volume, he used the word ATM, he can sell shares to buy more Hyperliquid, and it's ultimately accumulate that, and you trust the vision that they're using and the custodians that they use behind the scene to hold the asset. So what's Hyperliquid was from an ecosystem point of view is you have this ability to hold it on the native platform. You have the ability for institutions to hold it in a regulated custodian, or now you have the ability to hold a publicly traded company where you get that exposure is now in your Schwab account and against the rules of your brokerage account versus having to take the risk of custodial.
Yeah. So just a method for people who might not be able to access the assets or the ecosystem for them to do so in a compliant.
Or be crypto native if you just don't know how to get onto the L1 yourself.
Yeah, even like an educational barrier that helps. Yeah, totally. I like how I wanted to talk about hype, but still you're now talking about you're wanting to collect these other assets as well, which is really interesting. I actually didn't know that. Was that like a newer mandate, or was that always something that you wanted to do when you set out to start this company?
Yeah, so I've been in the space a long time. So I was like, DeFi summer on Ethereum in 2020 was like the unlock, right? We bought a lot of like Aave, it used to be the Lend, right? Curve, Uniswap, and yeah, these things like ran multiples and happened again on Solana. It happened again in smaller ecosystems. I think, I don't want to say definitely because I'm a public company officer, but like cycles repeat, and Hyperliquid obviously it's going to go on a rampage, right? It's like, it's happening on the hypercore level. It's going to happen within the ecosystem. And so for us, it was like, it would be really cool to use a liquid staking token, right? Because now you can stake your hype, and then you have a derivative that you can use for off-chain strategies. We use Flowdesk for some of that kind of stuff. And so you can generate more yield. So if we can out-earn the baseline 2.2%, then we're automatically a better option for earning return on hype than any other vehicle that exists publicly. And then as a default for just using the protocols, right, the protocols reward us with their tokens. So now we're like, great, let us get exposure to you. We don't even need to sell it. It's a bonus. And then the cool thing would be like, imagine a world where like KNTQ, Kinetic becomes like a $500 million or $1 billion protocol, and the airdrop is worth like $10 million. We can now deposit that into a lending protocol, borrow against it, and then run other strategies. So that's like literally the building blocks of DeFi that we are building exposure to as a public company. And as Nathan had mentioned, right, people don't have to worry about that, or they don't have to go through the steps. They can just get Hype D and get that exposure. So our mandate is always evolving, but for the cash, we will only purchase Hype because it's the most important digital asset that I think that's been ever created.
100%. Awesome. Okay, thanks, guys. That was really great and informative. How are we doing for time? We're not doing good for time. Okay, all right, fine. Okay, maybe everybody give me like 20, 30 seconds of like, looking ahead. Like, what are you most stoked about going forward in Hyperliquid? Either like new things that are coming out in the next few weeks, or maybe something you envision coming in the next like 6 months to a year, you personally or your company. Just want to hear your final thoughts, and then we'll wrap it up here. Starting with you, Nathan.
I think it's just going to be interesting to see as the asset evolves, the participants that are going to be involved with it. And I think, again, from BitGo's perspective, we just want to make sure to provide an environment that's safe for those large institutions to be involved. So I'm just excited to see who's going to come into the ecosystem.
Nice.
That's not if.
Yeah,
I just think so
when.
excited to see who.
Okay, cool. Jonny.
Excited to see the new builders, what they're building, new assets, everything of the sort.
I'm excited for coin margin. I'll just repeat that, I guess, because I think it's very maybe underappreciated how big of an unlock that will be for a net new user who never had a reason to come to Hyperliquid before.
I would say HYPE4 trading, outcome trading is also going to be a huge unlock when it's all available on one substrate.
All right, that's all the time we have. Give a huge round of applause to your panelists, please, and thank you.